Welcome to Investors Insights. Our topic today is economic update. We chose that topic because of the fact so many clients are asking questions about low interest rates, Fed stimulus, all the different programs that are going on out there, and how the consumer is reacting and what is the impact on that to the market. I am joined today by my colleagues from different remote areas. I have Bobby Norman, Trey Booth, Adam Van Zant, and Ashley Page in this vlog with me, and have just completed a fantastic meeting with them. So gentlemen, thank you for all the research you've done over the weekend to have this vlog and discussions. Bobby, I'm going to start off with you because I think you gave a really good summary of the economic data that we're looking at right now.
Yeah, Greg, last week in the vlog, we talked about how we're watching the rising tensions between the U.S. and China very carefully. And then just over the weekend, China said they're pausing part of the trade deal, which is already causing some volatility in the market this week. But we are seeing some good things. And so the good news is that the data points we're seeing the past 2-3 weeks is showing that the worst might be over for us. And so a couple I want to talk about today. Personal income. We saw personal income rise 10.5%. That is due in large part because of the federal stimulus by the government. Right. And we also saw the savings rate rose 33% in April. And so with income rising, we saw consumptions fall big. But we think that's creating some pent-up demand for the third and fourth quarter. We also saw new home sales rose slightly. That's great to see that there's underlying demand for housing, residential housing. And we also saw consumer confidence come up a little bit in May, which is great to see as we go forward. As the economy reopens, hopefully that will increase spending. So not out of the woods yet, but we're starting to see that based on recent data points, the worst might be behind us. So
we keep talking about watching the reopening of the economy, reopening of America. So that all ties in. And then Adam, you jumped in the debate this morning regarding housing, and I thought you had some interesting numbers there, because if people have saved up money, they're wanting to move forward, the markets are showing that. But talk about housing, because we watch that closely.
Thanks, Greg. Yeah, Bobby's point too of new home sales. So I want to dig a little bit deeper. When we look at mortgage applications, so they've gone up for 6 consecutive weeks. Why is this important? So we're keeping pace with new home building. That was a concern about a month ago. This is also important from a consumer level and interest rate level. We're seeing the consumer is keeping pace with the mortgage applications and also with the interest rate. So you might be getting a better interest rate in buying a house right now. And that kind of ties back to Five Plan Partners and the financial planning team. When they're doing your financial update, your financial blueprint with your financial house, it's very crucial to look at these things such as buying a new home, purchasing a new home. They can build that into your plan, and also refinancing. If you have a better rate to look at, they'll definitely dig into the numbers, into the details, and be able to tell you that.
Yeah, well, and you're correct about that. With the people that we're meeting with and updating their financial blueprints, if they're a current client or referred to us as a new client, people need to know that we have the capability in our financial planning and in your financial house to really look at what's the impact of buying that new home, doing the refinancing. And then the other thing is you make a really valuable point, which, the Fed has taken strong action on lower interest rates. And we've had those clients, as well as the data that we've seen, where people have said, we may never see these low interest rates again. And so I need to go on and move forward on this. So, that's all positive news on that. And then Ashley, from your standpoint, you elaborated in regards to the PPP program that the government had done to help businesses. You want to talk more about that, because all of that ties back into what Bobby was saying.
Oh, it does. What Bobby led us off by basically saying we're starting to see some inflection points in the data that are beginning to look better. And to Greg's point, this is one of them. We've covered, as our viewers know, the Payroll Protection Program pretty exhaustively on the vlog here. But we wanted to give you an update from last week that is very positive. The House of Representatives overwhelmingly, and we expect that with the Senate this week, to pass major flexibility in the Payroll Protection Program in 2 ways. The first way is originally you had to use 75% of the proceeds on keeping your payroll intact.
Right.
They loosen that now to say that's only 60%. So the upshot of that is you've got more flexibility of what you can do with the money that's already out there. That's first. Secondly, there was an original rule that on the payroll program, you had to pay that back or justify that back within an 8-week period, Greg.
Mm-hmm.
They're now expanding that to 24. So that's a lot more money in businesses' hands from a flexibility point of view,
Yeah.
both in terms of what they can do with it and the timing to pay it back. So through the summer, that could have a major sort of under the cover impact that we wanted to make you aware of.
Yeah, no, that's excellent. I think it's very important because again, throughout my career, you've heard those sayings: "The Fed is your friend. Don't fight the trend" is another one. Adam and you have elaborated, and Bobby as well, how low interest rates plus consumer confidence, if you bring the two of those together, that can have a huge impact not only on the economy, but we all know ultimately the earnings of these companies as we move forward. The definition of reopening is changing every day. What does that really mean? And are people flocking back in to go to these locations to buy things, to shop, to buy cars, houses, all of that? And so we're watching very closely how that builds up, and also the economic structure that all these businesses, both small and large, have moving forward as we see that start to ramp up. So Trey, you brought up a point as we enter the summer months and people start to go, well, do I go on vacation or whatever? At this point, we've seen lower gasoline prices, but you're bringing up some points here that maybe they need to go to the gas pump and fill up. Is that correct?
Yeah, I think that'd be good advice. If you have a tank that's slightly low, I'd go ahead and possibly fill it up. We've seen gas prices start to come up. We've also seen some calm in the oil markets after what was record volatility, where oil actually, the futures market actually went negative back in April. And so we've actually seen some calm in that area for the last few weeks. But that may change come this Thursday. OPEC, what is called OPEC Plus, which includes Russia, they are working on having a meeting this Thursday to discuss either extending the cuts in production or possibly eliminating their cuts in production. The U.S. shale production has dropped considerably. The amount of rigs has dropped to recent record lows in the U.S. So U.S. oil, the oil market has definitely been hurt by the drop in demand. And so it may be these foreign producers might use this weakness as a chance to pounce and potentially increase their production, or they may continue to keep their production low. So it just brings a large amount of uncertainty back to a market that we thought had seen some calm, and just in time, like you said, Greg, for reopening and potential driving. These low gas prices may not be here for long. So definitely not predicting the future, but is a moment to take some caution as we see global producers try and maybe flex their muscles.
Well, and the other thing is you emphasize the fact stability or things starting to get back to normal in the way in which the markets actually work. We've seen these abnormalities, and we're actually starting to see us get back to whether we're looking at earnings or consumer confidence or oil prices, the way you really should be looking at things without being blindsided by the abnormality of the economic data. So hopefully that will continue to be a trend, and that's why we chose Economic Update, just so that you know that the decisions that were made a few months ago, we're now starting to see the rippling effect and to see if they are successful. We're going to keep you updated as we enter the month of June, and we will hope that you have a great week, and that from the standpoint that you start planning that vacation, and hopefully we can all get out and about and actually make this reopening America very successful. Take care. Have a great week. Follow us on social media, and we will keep you updated.